Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, December 22nd, 2021. A quick housekeeping note: as I mentioned, I'd be out yesterday. My trip was delayed a little bit, so I was able to get that post to you guys out in the morning when we hit those first bounce targets on NQ and ES. Trip was delayed due to bad weather, and that it made me go out later and get back later. So I didn't get an update last night. But I do want to do one this morning. I wanted to do a video and share my thoughts on the market. But here's what we're going to cover. We're going to cover the equity markets and then just an update. I want to update gold and silver as well as Bitcoin. So let's keep it focused on those so the video doesn't run too long. Any other trade ideas I'll cover in a separate update. All right, so what's happened lately? The most important things out on the chart is this is a big level, 15,536 on NQ, NASDAQ 100. We're looking at a 60-minute chart. And remember, we hit that level the other day. We hit it here. We had a nice rally. We hit it here. It was also price targets on QQQ as well. So it's a support that was laid out early on when we first got these two sell signals here. And I made a comment under one of the recent posts. You know, this was hands down, bar none, the most bullish setup that we've seen in the markets in months, many months, more so than any of these others here. So it could certainly play out for more upside. And so far the bulls are buying it, so you got to respect that. You know, we hit that expected a bounce, we got the bounce, and then we got a little bit more. So let me just tell you where we're at now. There's certainly technical cross currents. Nothing's changed on the monthly and the weekly charts as of yet. I'll get to those in just a second, talk briefly on that. Not crazy about the follow through to the bearish engulfings that we had on the weeklies so far. We are down below where we got those, but we're kind of moving sideways. This is the big picture right now. We're moving sideways in the S&P and the NASDAQ in this little box that I have here. And again, it's these 60-minute divergent lows, and in hindsight, let me say shame on me that I should have made mention, not just for a quick bounce trade with those minimum targets, those shallow targets I gave you, but maybe more so buy it there, maybe even cover shorts. And then just let it run with a stop and reverse below. In other words, if the bounce only hit that minimum target and turn around broke down, this, and it still is, by the way, a break of that level, nothing's changed, is still an objective short entry. But with that pretty powerful bullish falling wedge that we had right there in the breakout so far, the buying has been pretty impulsive. Now look, I have to say this. This is probably the biggest holiday week of the entire year. You know, 4th of July, volumes drop, people go on vacation, but this is the week of Christmas. Most traders are on vacation. I'm on quasi-vacation, which, by the way, I'm also out tomorrow. Same, my kids are out of school. Took one of my son and a bunch of his friends out to a remote island for a camping trip. I got to do the same thing tomorrow. I got to pick them up midday, so I'm going to be out in the morning. Probably tag a little fishing on early on, and then that's probably going to keep me out most of the day tomorrow. So I just wanted to get that out there. And again, anything big happens, I will be back. I won't be back late tomorrow, so I'll get an update out to you tomorrow night. All right, back to where we were. So it is a holiday week, so you take everything with a grain of salt. But again, the technicals so far on this 60-minute time frame, that's nothing but bullish. They stepped in, the buyers stepped in where they should have, and they moved it up so far, buying pretty aggressively. So let me just talk on the levels now. Right now we're pretty much at resistance as I do the video, where it's 16,019 right there, and I have resistance. You can see it about 1605, so that's close enough. We're at resistance on NQ, but I will say this is even bigger resistance here. It's 16,133. So this is where, if this is just another counter trend pop, and we're going to take another leg down and take out this low, again, that's going to be your next sell signal. Anything else in between is noise. If we get rejected here, I can tell you it's objective to short. Probability, I'm not as crazy about it, the fact that they bought this low. So I'm just saying, same thing I was saying last week, keep it light right now. Until we take this level out, probably best to keep things light on shorts and longs, because until the longs take this level out, these are the two big levels. And that's, if I had to just do this video in 30 seconds, I would say This right here, about 16,423. We've had so many reactions there, rejected each time, including several impulsive rejections off that level. If the bulls break that level out, break above it, even though you have a previous high there, that to me, the market's probably going to run. I don't think it's going to happen based on long-term charts. So what I'm looking at are levels will likely turn down, and the next biggest level is right here, about 16,133. So another way to say this is resistance where we're at now, about 1605, and we could certainly reverse here, stop this. It's just a typical counter trend balance. I measured the fib so far. We're in a typical, you can even eyeball it, roughly not even half, about halfway up, roughly a 50% retracement. I think the S&P is a little shy of the 61.8, and then you have resistance right here. So if you are trading, if you're a swing trader and you are micromanaging or scaling into shorts, let's say you covered here, that's your objective levels to short right here from where we're at now up to about 16,132. We get above there. Can you short another run back here? Yeah, you can. Absolutely. You can make a case to do it with a stop somewhat above. So let's just say that's my max area where I think this is going to reverse if we are going to end up taking that other leg down, which again, long-term charts indicate we are. Now, very important. So if you're scaling short on bounce backs to resistance, I would not be adding above there. I'd be more concerned about quickly or rapidly scaling out, or maybe a hard stop. I'd usually like, if I layered into a position, I'll usually layer back out. It all depends. But again, those are levels to watch. So anything in between is kind of noise right now. It's hard for me to say where we go today. I like making micro calls. All I can tell you, we're at resistance. Probably pull back again, and if we don't pop up here, 16,133, pull back there. And let's look at ES real quick. ES, again, this is a lot going on. The charts to me are pretty clear right now. The technicals are pretty clear. There's that nice clean uptrend line in ES. Remember, we just ever so briefly spiked below it, but then closed right back up. We kept our 60-minute closes up above or right on that trend line, and it was an almost identical setup here. We had divergent low, and we had a divergent low here. We had divergent high right here, correction. Divergent low, rally. And then this ended with a divergent high, correction. But the important thing is you keep hitting this trend line, and so ES on the 60-minute remains above the trend line, and they've stepped in pretty aggressively since that last successful test of the trend line. So it's like a game of tennis, and if you look at the bigger picture, or at least the intermediate, not the bigger picture, but intermediate, the S&P is also kind of grinding around in this range. I might not have got the top of it very good there, and that's it. So it's kind of noise. However, while I'm doing the video, right now we're at a pretty decent resistance, and I have it at about 46.54 almost, and that's this level right here. Plenty of reactions on that level from above and below recently. So that's resistance. Above that, I'm going to move this line up just a little bit. I think that line should be set right there at about 4,700, and then 47.22. And so those are the levels that really the bears need to keep it under to keep this scenario alive. And of course, once again, just like NQ that I just covered, ES, it's a break of the recent lows, because we break the recent lows from the other day, we're also going to have broken the trend line. So those are your levels. If you're looking, I would just say an aggressive short or a full short position if that happens. Right now, if you took the long the other day, again, you're coming off one of the most bullish setups in a while, positive divergence on the indicators down here, and you could just trail it up and let it run to whatever your target is, or if you want to actively trade, again, right now we're at resistance, so by the time I get the video out to you, we're either going to most likely have reversed here, maybe we're still trading there, and you could try to game it for a pullback trade, or we're going to break out and then run up to the next level. But you want to watch ES and NQ together, because if ES pops it and it's running towards that 4,700, but halfway there, NQ hits the next resistance, that's where the sellers might step in. And so you got to watch that. All right, next up, let's look at the Qs and SPY. Let's do the same time frames. 60-minute chart. Remember, when we hit that level on the other day in NQ. It was also T2. That was my former, or still, for the still same active short trade from here and here. Those entries hit T2 and we hit it again. So as I said before, if it was support back then, which it was, it's even more support, more important support, because of the fact that we had a very distinct and powerful reaction off it when we first hit it. So again, that's a big level, and that number is roughly 378 on QQQ. That's the level that needs to go, and if it does, then I suspect we'll get that pretty sharp drop down that I'm talking about in impulsive selling. Until and unless that happens, like I like to say, support is support until and unless broken, and it's not broken. They stepped in there. So now as far as resistance levels go, we had this downtrend line, little brief pop, but we couldn't, it was a whipsaw, and there's enough reactions on that level to validate it, and that's just overhead. So just like NQ, as I started out in the video, we're at resistance, and on QQQ that resistance level is 390. So this could be a stopping point for this rally, and if not, just above it about 393 is also pretty decent resistance. There's a gap in there, the trend line, and everything else. And then this is the big number. I was talking about it being a big number weeks ago, 401. Multiple rejections on that level, including one right here that happened in the pre-market session. I posted that morning, said objective short entry, and that was a great short trade, especially for active traders. So that's what's going on, guys. We're looking toppy, but if you look at a glass, that's if you're looking at a glass half empty. If you're looking at a glass half full, in other words, as a bull, you just say, oh, it's a level of consolidation before we pop it and have the next run to new highs. So respect whichever way it goes. Again, I talk about long-term charts, and those still indicate to me, based on a lot of the things that's happened, such as the recent divergences on the daily and even weekly time frames. Bearish rising wedge breakdown right here. So if you look at it from here, this is a bearish rising wedge right there that broke down, and we've been moving lower, and in classic downtrend fashion. A downtrend is simply a series of lower lows, 1, 2, 3 right there, right, and lower highs. We had a high there, a high there, that was slightly lower there, slightly lower there, and so until and unless we take that out, remember I gave you a downtrend line on the 60-minute chart, that's pretty much it. So that starts to call it into question, and again, boom, 401. Unless something crazy happens, another whipsaw, I say bulls. That's going to be pretty bullish if we get it. However, there's been a clear pattern of wash, rinse, repeat. Every time they've gotten up there, they get rejected. So I think a lot of eyes are going to be on that level, and anything in between is kind of noise. Again, box it in like this and just look at that range. Go under the recent lows, and then 401. So this is bulls win, bears win. Simple stuff, right? And it's also, if we take that out, we have that uptrend line that's going to be taken out as well. There's the divergence, and as I mentioned, break above 401 doesn't have to be all she wrote, onto the road to new highs and beyond, because if it happens anytime soon, by the end of the year, early into January, in the new year, you're going to have a much bigger divergent high, because these indicators are lagging so much that there is a 100% guarantee that if we can pop that soon, the indicators cannot possibly have burned through the divergence. We're going to have that divergence. So again, if you're a very long-term patient trader, I think it's still a case to be made to be sitting on some shorts and giving them room. It might be frustrating, but at the end of the day, don't trade only the indexes. If you trade only the indexes, you're going to be frustrated, especially in a sideways trading range, or if it goes against you. So we have a lot of other trade ideas out there, and I'm going to get to those in just a second. So that's QQQ. That was the daily chart, and the weekly chart again. We had our bearish engulfing candlestick right here. I tried to show it there. Confirming red candle, non-confirming or questionable green candle. It didn't negate the sell signal, the bearish engulfing, but it didn't help to validate it. Then a red signal. So again, we've been moving sideways, and this is not ideal action. Usually, once you break down, you get some pretty impulsive selling. But sometimes, I roll back and I look at other periods where you had that kind of toppy action. When you peaked, you went sideways for a few weeks, and if you can see it there, let me zoom that in. Same kind of thing. You the markets traded sideways for a little while, And then, give me 1 second. Here we go. Just trying to grab the zoom in thing. So there's another example right there where you had, and a lot like now. Remember, we made a high and then a marginal new high, like I talked about. Then we, after the first correction, we set up a period of consolidation, and bulls win, bears win, but bears won. So from that breakdown there was a drop of about 14%. And jumping over to the SPY weekly, there's our bearish engulfing candle. It engulfed those previous two candles. Here, I'll zoom in nice and tight for you. That's the bearish engulfing right there. Confirming candle, then a non-confirming or just questionable candle. It did not violate the top, didn't take out the top of the bearish. You had another red candle, but it was really sideways in that range of that side. We really wouldn't give that one any points either. Just keep it as a question mark. This one had the potential earlier in the week, and it still could. We've got a few days left in the trading week. No, I believe we actually Friday, if I'm not mistaken. Normally they close the market early on Christmas Eve, but because I think Christmas, correct me if I'm wrong, falls on a Saturday this year, they would close. The markets would be closed Friday. I'll have to double check that, but I think they'll have the observance for Christmas on Friday, so I think we have an abbreviated 4-day trading week this week. Either way, again, this is not ideal. What you want to see, more selling, but it is what it is. Let's not make too much of it. It's a sideways market again. Bulls win, at least near term. Bears win. Here, and there it is on the daily chart. We were just looking at the weekly chart. There's your box. There's your range right here. Simple stuff, right? But again, why do I still favor downside break and not an upside breakout and a continuation of the trend? It's this and a lot of other things, everything I've covered about market internals, the breadth deterioration, sentiment, and all that other stuff. Plus, again, it'll be a failure of this breakout. That was a previous all-time high. We broke out there, successfully back tested it there. So far, another successful back test, and that's it. Okay, so enough on that, and you guys already know where my downside targets there are. If we do break that, I believe you do, I'm looking for at least a test of the 200-day moving averages on SPY and QQQ, and those are down quite a bit below. Okay, and a quick update on the precious metals. Still liking gold. Remember we had this uptrend line here with a little bit of a brief breakdown below, but that breakdown, instead of causing a big wave of selling, we did it with positive divergence, just like the markets in reverse will have if they happen to pop the new highs over the next few weeks. So we had positive divergence. We had a bullish falling wedge. We broke out, went sideways, made a marginal new low, but it was still a divergent low, even bigger. And so far, a nice lift in gold. Nothing goes up forever. We pulled back, and we're back testing that trend line now, as well as we're right around. It's been a little bit of a sloppy trading lately, moving through, but that 1792 support right there, or resistance, we broke it and we're back testing. So I still favor more upside in gold based on the technicals and everything else. 1819 is my next target, then 1840. Then if it clears that, you got to run at the previous highs. And let's also remember, bigger picture, it's been a sloppy range, but gold's been trading mostly in this range for many months now. So sustained breakout. This was a failed breakout. It sent us back to the bottom of the range, but so far we've held that. So still looking good for gold. Silver, also still looking good. Still like this one. You had positive divergence at this recent low. That was also a double bottom low. We successfully tested, just like NQ just tested that previous low. That's what gold did here, and did it with positive divergence right there in place. There's your divergence lines, bullish divergence on the 60-minute chart. And you have 2262 right there. You got almost what looks like maybe a little bit of a, kind of could be an inverse head and shoulders bottoming pattern right there. Either way, it's moving up since the divergent low. So if you're long silver, it should hold that level. You have a stop somewhere in there and you let it run, especially if it can break this level with conviction, which I think it will. 2310 should run up to. It's our next target. 2380, and then maybe take a run at these previous highs right there. Okay, and for gold to run, it is not absolutely necessary, but it certainly helps to see the euro rally, because if the euro is going up, it means the dollar is falling, and that's bullish for gold. It's been the currencies are just kind of in flux right now. It's big times right now with the central banks. Remember, it's not just what the Fed does it's going to impact the dollar index. It's what the euro or ECB does as well, because the euro is by far the biggest component of the dollar. So it's really the battle of those two currencies are going to determine where the dollar goes. So you had a bullish falling wedge, and I highlighted it, and we broke out, and and we had a lift in gold. But since then, we've been going sideways. So again, it's like how that's the cross currents in the dollar. How hawkish is the Fed going to be against the ECB? And right now, investors are just trying to figure it out. So the euro, and this is the euro-US dollar pair, has been moving sideways. I suspect it'll break out most likely, and if so, that's going to help that gold and silver trades, and we'll run up there. Let me give it to you on E7. That's the Forex pair. But E7, the euro futures are, got it here somewhere. There's my E7 chart. And you can see, same thing. Bullish falling wedge right there, nice and clean too, positive divergence. And it's not as if it didn't play out. We broke out, we rallied up, hit that first target there, 114, and been moving sideways between 114 and that 1254 right there since. So this same thing, need to pop 114 and then run up, and I still do. I maintain this target here about 115.70, and if that happens, that's going to be bullish for gold and silver, or should be. And I also laid out bullish setups and trade ideas for platinum and palladium as well. This is palladium futures PA. You can use the ETF PALL as a proxy if you don't trade futures, but we're right up to getting close to my that 118.84 target and the downtrend line. Remember, this is where I was targeting. So we have dual resistance levels coming in. If we can pop 1884, we'll probably make a run at the trend line, maybe back to us 1884 and run on up here, potentially to 2140. So I still remain near-term bullish on palladium, but longer-term bearish. So I'm only looking for counter trend pop and then another leg down in palladium. Platinum, and that's PL. Platinum futures looking good. There's positive divergence laid out recently. I like this one because we had a double bottom right there. Successfully tested that previous low at about 893-ish, 894, 893. Held it, and that was an objective long entry with the positive divergence. So we're already up pretty nice and just hit my 948 target. So you can take profits if you wanted to do, what is that, a quick about 6% maybe, 7, no, more than that. Yeah, about 6.5% off that recent low. Yeah, I think it has a potential breakout here, especially if the euro does what I'm looking at, and gold and silver and the metals rally. If it can pop this target here, 949, run up, I have 971, and then about 1,000 there, and then after that, yeah, 1028. That'll be my max target. We'll just play this one as it comes. Right now, still looking good. By the way, PPLT is your ETF for platinum if you don't trade the futures. This was, again, PL. You can see it up here on the top. And last but not least, the cryptos are continue to set up. I've been highlighting Bitcoin and Ethereum recently. And what you have here is the positive divergence continues to build. I've been highlighting the divergence here on the 60-minute. Actually, this is a 120-minute chart, 2-hour candles. And you can see, here you had a divergent high right there, followed by a correction. Then you had a small divergent high. Actually, no, it wasn't small. I don't know where the lines went. Sometimes these lines just seem to poof, go away. But that was your first divergent high right there, followed by correction. And then there's a case of a marginal new high that was still a divergent high, just like what we'd get on the markets if they happen to punch out to new highs by the end of the year or shortly thereafter. And all we did is simply extend the negative divergence that was already in place at this point, and it got even larger, and that's at that correction. So this was mentioned as a short on the cryptos back then, but now I'm looking to get long, and actually started to. I told you recently I took a starter position, but I would love to see one more thrust down, and I put almost coin toss odds at it. that we can get that, and that level is about 41,600 right there. It's a big support level, but again, we're at a support level now, or just hit it. Yeah, we just bounced off at that 44,920. And so here's what you're looking at. You have a pretty clean downtrend line right there, and it forms a bullish falling wedge. And so if we break out, that's going to be bullish. First target's 53,593 and potentially 59,330. Again, so we can pop now, or we can come on down here and continue to work in this wedge, maybe work our way down to 41,600. So as long as the chart's still constructive, I plan to add to a position there, a light starter position if we get there, or I'll add to it if we break out, and that's Bitcoin. GBTC is the ETF that you'd probably want to use, or ETF type instrument, GBTC, if you don't trade futures. And well, let's look at, well, we can see here on this daily chart here, you can see the PPO is starting to curl up, poised to cross over. Let's look at the last time we made a bullish crossover in the daily. It was right there. And you can see what happened after that. This happened. Oops, nope. Gosh, a lot of times I click on these tools and they don't take. Just off the screen I have my arrow tools, circle tools. Time before that was right here. So you can see it's been a pretty effective strategy, just going long on the bullish crossovers on the PPO. However, 60-minute chart also looks constructive. You have that same positive divergence building as you do on the futures, obviously, because this thing's tracking Bitcoin. And again, so I can see the possibility in a really welcome move down here to the 3160-ish level right there. And but we might not get that. We may reverse here, as I said, because we just hit support on the futures. And so targets right now, that yellow line up there, I think we could swing up there. The first one's about 38.43 and then 41.43. And then you also have Ethereum. You have ETCG, classic Ethereum. Sorry, I had a phone call there. Classic Ethereum, bottom, nice divergent low right here on the 60-minute chart. Not crazy about that downtrend line, so I wouldn't put too much into it, but the divergence you do need to take heed of. Last time we had a divergent low, well, one of the times right there. And let me show what it looks like on the daily chart. You also have some positive divergence building. We're holding on to it by the skin of our teeth here on the PPO, because meaning if the PPO goes much lower, it'll take that divergence out. But it is still there. We have roughly equal lows, and we have higher lows in the PPO, or the RSI, excuse me, and there's your divergence. And we had support. It wasn't a hard level. This was a rough support level, about 1733. We briefly popped it, but we're back on it now, or back a hair above it. So that one would probably pop up here at about 2240 on the daily chart. Or you can trade ETHE, which I believe this is Ethereum 2.0 if I'm not mistaken. And that's the divergent high right there that we had recently that gave us this correction. It was pointed out. You had a marginal new high right there which failed, slightly above that previous high, which was also a divergent high. So simple stuff. Just look at the bigger picture. Look at these divergent highs. That one, if you shorted that, you made a ton of money. That one, and so far this one. So it could have more. I will say that. And so you have to be nimble. But even if it's going down here ultimately to this uptrend line or to this 2661 level, it's going to most likely have a bounce somewhere in between, and so that's what we're looking at here. So potential setups there. Again, I'm not a kind of an all-in or aggressive trade right now for the reasons that I mentioned. Okay, that's it. So there's your update on the markets, precious metals, and cryptos. And anything else, I'll follow up with a different video or additional charts. Again, I will be here today, so you'll get at least one more update later today. And then I will be away from my desk most of the day tomorrow, returning in the evening. This has been Randy Finney with Right Side of the Chart. Have a great day.